With tax problems, listen carefully. If you owe over $10,000 in back taxes or have unfiled tax returns, U.S. Tax Shield can help you take back control. The IRS can seize your bank accounts, garnish your paycheck, close your business, and file criminal charges. Our team of tax attorneys can stop collections and get you protected. U.S. Tax Shield offers a price protection guaranteed quote to get you protected today. U.S. Tax Shield is A+ rated with the BBB, so call 800-466-9625. U.S. Tax Shield, 800-466-9625.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Estate planning is about more than just deciding who inherits what. It also shapes how your assets are treated over time. And that's a key point from the estate planning attorneys at Cushing & Dolan. Without a clear plan, an estate can face significant tax exposure, as well as long-term care costs that can put pressure on your savings. Trusts often play an important role in your overall plan because they can help address tax concerns and long-term care planning, while still allowing you to retain control during your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what to consider as you prepare for the years ahead. To get your free copy, call 866-848-5699. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Protecting Yourself or a Loved One from Elder Financial Abuse. Mike, this has become, unfortunately, a growing problem in recent years. Can we give just a little bit of an idea of what we're talking about when it comes to elder financial abuse?
Well, it can run the gambit from anything from, trusted people surrounding the loved one, stealing from them. You've heard the horror stories of caretakers and things like that, or neighbors, taking advantage of somebody who has money and might not know how to manage it anymore, to, the typical online types of schemes where people are posing as the IRS or the police and taking advantage of trust in those ways. So it does run the gambit in terms of the types of frauds that you see.
What are some of the things just that people can be aware of in terms of potentially noticing this before it becomes a real problem?
Yeah, I think, a few items. One, if your loved one who is well off is suddenly nervous about money or constantly not having quite enough money in certain situations, especially if there's cash missing, that's one. I think another one is a change in behavior when it comes to talking about one's finances is another red flag that I've seen with folks, but really is trying to detect, hey, when is somebody too trusting with people out there?
Folks, our guide is titled Protecting Yourself or a Loved One from Elder Financial Abuse, and there are 2 ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome to this Tuesday edition of the Financial Exchange as we shake off some of the Super Bowl hangover that didn't really go our way in the New England area. But this week for us on the Financial Exchange is sort of like our Super Bowl week in terms of the amount of economic data that is coming out this week. It is truly a very busy week in terms of what we'll see. We have a retail sales report that we're going to get into in just a moment that was released at 8:30 this morning. We're going to get a jobs report tomorrow, and then we are also going to get a CPI inflation report on Friday. It is very rare that you have all those reports within the span of 1 week. Typically, they are broken out into the one a week cadence by the way the scheduling is released. But our Super Bowl, Mark, we got it all this week. We got a little bit of labor, a little bit of inflation, and then a little bit of the consumer pulse with retail sales. And we'll start with that this morning. A very weak retail sales report that came out for the month of December. Analysts were expecting for spending to grow 0.4% month over month in the month of December. We saw that the spending for the holiday season in the month of December was flat. And if you look back year over year on the spending trend, it basically was down in effect, where you had retail sales from last year in December of 2024 to December of 2025 growing 2.4%, but that's against a backdrop of inflation that was running about 2.7% over the same span of time. So really not a very strong report here at all. There were several areas that were quite weak. Some of this was a little bit anticipated. We did see some soft spending on autos and home furnishing and appliances, and that was sort of perhaps baked in, but worse than anticipated here. And as a result of that, you've got markets that are in relatively mixed territory, slightly positive on the equity side of things. I don't think they're as concerned. We do see that the bond markets are having a pretty sharp reaction here, where we've got the U.S. 10-year Treasury off about 5 basis points down from 4.2% to 4.15%. And so, Mark, I'll throw it right to you. Just initial reactions from this release this morning on the retail sales side of things.
I have no reaction. No, you really shouldn't.
I was like, oh, God, we're up to a rough
you
start.
Really, Paul's like, Tucker, do I have to do this?
I'm going to throw him out the window.
Do I have to do it? Yeah, no, obviously I'm kidding. I really don't, though. You made a good analogy, because it's not the right way to think about markets to the Super Bowl. In a game, any sport, every play matters. You can always look, if you hadn't missed that free throw or whatever, the game's outcome would have been different. That is not true of day-to-day movements in markets, nor is it especially not true. Nor is it true with respect to day-to-day movements in statistics, in economic statistics. Nobody looks back in the fourth quarter of 2008 and says, "Oh, had retail sales just gone the other way, we would." And I'm using an extreme example there because the individual observations, the data we get from month to month, they're not. It's going to sound a little silly, but they're not like individually. They're not as important individually as is the trend that they point to.
Right.
So and you could say, well, each one is the sequence is an important part of the trend. So you can't dismiss any one data point, nor can you read much into it. Now, you guys do a daily show here. So you have to come on the air and talk about whatever the news is and try to make some inference from it. But that's not the way a researcher would look at it. So I always I struggle with how to make these minute-to-minute releases kind of relatable and relevant. If something falls through the floor and it's confirming what other data is saying, that might be interesting. But this is kind of an anomaly, Paul, because all other indicators, with the exception of some softness in the labor market, which we'll get to, are pointing toward reasonably strong economic growth, which we measure using GDP, another topic we're going to get to, a big component of which, just in an accounting sense, is spending, is consumption.
Yeah. And the month of November's numbers were quite strong, so that is the backdrop heading into this month that we did see in November a over 0.5% increase month over month on retail sales. You know, some mentioning today that perhaps what we saw in December was some of the effects from some of the tariffs just because of some of the areas. But like you said, it has to be a larger trend before you're willing to go and point in that direction. Like you said, you're trying to analyze these on the fly and do the best that you can to pick out where the trends could really be going.
So what's another analogy? Maybe, the people who say, global warming, it's cold out today. Well, first of all, it's called global warming because it's not just how you feel when you walk outside your house. But secondly, you got to look at average temperatures. Mm-hmm. And there is something funky going on. I'm not saying what its cause is. I'm not qualified to. But that's an example of focusing on one like data point and not thinking about larger trends over not just weeks and months, but really years.
Right. And on the spending front, if you look back at some of the larger trends, like you were mentioning, we have had really strong economic growth. It is important to point that out. Q3 GDP was at 4.4% as of its most recent revision. We're looking at for Q4 of GDP about 4.2% at the moment, though that's supposed to be revised a little bit here today. Of that growth that we've seen in the economy, there has been a 3.5% growth in consumer spending. That does make up a bulk of some of the GDP growth that we've seen. It's about 2/3 when you're looking at economic growth is tied to what is the consumer getting out there and spending. So it is worth noting that, hey, December did come in weaker than anticipated from a spending perspective. But like Mark has mentioned, you got to string together a couple months of that data to really point to it being significant, because we did have that November number was quite strong.
And it's not a natural way to react, because somebody presents you with a number. It's either bigger than expected. It's always relative to expectations that matters, I guess, because markets are pricing in theory, what's expected. It's natural to think, well, I'm supposed to react to this. The media's talking about it. These guys on the radio are talking about it. It must mean something. And no, not necessarily.
On the other front, retail sales, just anything else I think that is worth pointing out here. I mentioned the weakness on autos and home furnishings and appliance. We did see some other areas that saw a little bit in the way of gains. We saw building materials for garden equipment increase 1.2%. We saw gains at sporting goods stores almost up 0.5% there, but it was those furniture stores and clothing retailers that saw a bit of a decline. As I mentioned to kick off the show, really big week in terms of economic reports being released. The retail sales one was one that came out this morning, but tomorrow we'll get the jobs report, which I would argue is probably the most significant of the week, just given the amount of scrutiny and focus on the labor market. And in particular, not only will we get what we anticipate for January's gains in the labor market, which is estimated to be around 70,000 jobs that were added for the month of January. We had 50,000 that were added in the month of December. the unemployment rate sits at 4.4%, but not only are we going to get updates on those figures, we will also get a backward-looking revision as to how many jobs were added from March of 24 through March of 25. So certainly that is going to be of a lot of focus for what the Federal Reserve does from an interest rate policy perspective and what markets will be looking at tomorrow morning when that comes out, Mark.
Yeah, for perspective, in 2022, coming out of COVID, 4 million new jobs were added according to the so-called establishment survey of payrolls. That number jumped in 2022 to 6.2 million, just staggering. Yeah. So the economy was growing fast, too fast. That's why we had inflation. The economy was exceeding its speed limit, its productive capacity, if you like. And then things started to cool off. 3.3 million jobs in 2022, 2.1 million jobs in 2023. Excuse me, 3.3 million. 2.1 million in 2024. And we 2025 through. We got December, right? We're going to get January. So this is for the full year, 1.4 million, but subject to revision.
Right.
So clear downward trend, but off a feverish, unnaturally hot pace. So the question I struggle with is, not that you asked, but is this just a normalization? I mean, unemployment's at 4.4%. If you put that in a hat, that rate, and you pulled that out of the hat, and whatever you pulled out of that was going to be the unemployment rate, you'd be really proud of yourself. That's extraordinarily low in historical terms. But there are some people who think, it should be 3, I guess, or I don't know.
Well, it's something that, just looking forward, that is worth scrutinizing, because if you do see a significant uptick on the unemployment rate, you would imagine that you'd see weakening consumer spending, and there would be all these trickle-down effects from it. So
maybe that's just I don't know. Is that just the normalization? And I'm throwing out a lot of rhetorical stuff here that's not very helpful. But my point is, as a researcher, you never really know. What if the economy's so-called natural rate, its non-inflationary rate, has jumped to 5.5? I don't think so. But historically, it was between 5 and 6. It got below 5 in the late 1990s, and the productivity miracle that was brought about by IT allowed unemployment to be very low without inflation ticking up. The question is, where are we now?
We're going to take a quick break here on the Financial Exchange. When we come back, a lot more to talk about in what is a very busy week, previewing inflation as well as some other economic reports that are due out in this busy week right after this break.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Life changes quickly as we age. Technology is moving faster and is creating new risks for families they didn't have to worry about before. One of the biggest is elder financial abuse. Hi, this is Mike from the Armstrong Advisory Group. I'm not talking just about scams, but situations where more online accounts, digital payments, and shared access can slowly open the door to problems. Today, financial exploitation doesn't always look obvious. It can show up through unfamiliar transactions, misused powers of attorney, or pressure from people who already have a role in someone's life. That's why the Armstrong Advisory Group put together a new guide called Protecting Yourself or a Loved One from Elder Financial Abuse. To get your free copy, call 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com. Estate planning is about more than just deciding who inherits what. It also shapes how your assets are treated over time. And that's a key point from the estate planning attorneys at Cushing & Dolan. Without a clear plan, an estate can face significant tax exposure, as well as long-term care costs that can put pressure on your savings. Trusts often play an important role in your overall plan because they can help address tax concerns and long-term care planning, while still allowing you to retain control during your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what to consider as you prepare for the years ahead. To get your free copy, call 866-848-5699. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Remember, you can watch the show live every day on our YouTube page. We'll have breaking business news, and all of our content is also archived. So if you want to go back and see an interview or a discussion about a specific topic, it's all there with the click of a button. Just search the Financial Exchange Show on YouTube and hit that subscribe button.
As I was mentioning in the earlier segment, really big week this week in terms of economic reports. We'll get the jobs report tomorrow, and then on Friday we will get the CPI inflation report for the month of January. So we're going to spend a couple minutes here just talking about that report that is due out on Friday. Inflation has run at 2.7% year over year. In terms of what we're anticipating for Friday's release, we're looking at, I believe it was 2.4% in terms of what they're anticipating for the inflation on the consensus for Friday's numbers. But certainly something that is in big focus as you head into 2026. There has been perhaps some arguments mentioned out there that I don't put a lot of weight in, that there will be post-holiday adjustments by retailers that will be reflected in this January report. These price adjustments will tick up. A lot of that is seasonally adjusted when, typically retailers will go in January and adjust prices. So a lot of these reports adjust for that fact of seasonality. So I don't know if necessarily that will be a huge piece of it, but certainly that is a big focus, part of the dual mandate for the Federal Reserve, and dovetails into the next item here to address is not only are we going to get the inflation report on Friday, but also it is going to be another indicator for the Federal Reserve to sort of assess in terms of what they're going to do from an interest rate perspective. If we take a look right now at the CME futures market, about a week ago, you had, in terms of the probabilities of where interest rates were going to go from the Federal Reserve, a 90% probability that they were going to continue to stay the course in the next upcoming meeting on March 18th and keep interest rates at 3.5% to 3.75% on that Fed funds rate. With some of the retail sales reports numbers that we got this morning and just some of the trends over the course of the last few days or so, it is now at about close to an 80-10 split of holding rate static versus potentially pricing in a little bit more of a likelihood of a cut here heading into this next meeting.
Yeah, the Fed's dilemma, and it's always in a bit of a pickle because unemployment and inflation, and you could substitute for unemployment, vacancies, GDP relative to potential. There are a lot of ways to measure slack in the economy, and the best way changes over time. That's a challenge in and of itself. The Fed is always trying to determine, is the economy running too hot, too cold, or just right? Just right means demand is growing no faster than supply. The Fed, you can think of as controlling demand. They print money, lower interest rates, or take money out of the economy. It's a little more complicated than I'm obviously portraying it, but this gives you the gist of it. Take money out of the economy, they slow demand, and thus slow inflation. Fed's always asking, is the economy, again, growing too fast relative to its productive capacity? Is demand outpacing supply? Demand really outpaced supply in 2021, 2022, and into 2023. We saw the result, inflation. Was that all the Fed's fault? No. No, the Fed can control inflation in the very long run. Money supply growth lines up well with inflation in the long run. Doesn't line up well with it in the short run. There are too many other factors buffeting the economy globally that impact inflation. So the Fed's job, needless to say, is hard, but ultimately responsibility for stable, low, long-term inflation lies with the Fed because that's driven by the supply of money which they control.
Sure. The what we're looking at is also a focus is the neutral rate, which is basically this idea of, hey, where should interest rate policy be that neither, like you were just kind of alluding to, as some of the responsibilities stimulates or constrains growth. That is sort of what the Fed is always trying to feel around and find, but it's something that is abstract. You're never going to know exactly where it is. It's more of a feeling out process, and some of these reports help to give a little bit of guidance, but as you mentioned, it's really hard to balance. The two focuses are that inflation and job growth of the Federal Reserve. And on the inflationary front, it is about 2.5% that we're anticipating on the year-over-year number from an increase on the inflationary front. But right now, investors are pricing in that there would be 2 rate cuts this year. You've got the Fed on their most recent projections projecting in 1. Of course, we'll have Kevin Warsh succeeding Jerome Powell in May of this year. So that is going to be of focus. On the last Federal Reserve meeting vote, you had 10 people who had voted to keep rates where they were at about 3.5 to 3.75% and 2 dissenting. So that is all on the table over the course of the next couple days. We'll get more economic data points there, and then that meeting though is not going to be until the middle of March.
If you want a little framework for thinking about the Fed, the thermostat analogy is okay. I use it a lot.
You love it,
but it's flawed. Yeah, as much as I can love anything, I guess. But that's it. Those my emotional issues are not what we're talking about here. The idea with the thermostat analogy is, well, the Fed's job is to heat the economy up when it's running too cold and vice versa. The problem with that analogy is that the Fed doesn't know what the actual temperature is right now, so it's got to guess at that. The Fed doesn't know when the furnace is going to come on or the HVAC system is going to come on. Mm-hmm. Like you bump it up a couple degrees because somebody in the house complains, it might not come on for 6 months if you're the Fed. That's another problem with my little thermostat analogy. Another problem is that you don't know what the temperature is going to be outside by the time the friggin' HVAC does come on.
Yeah, in my house, different rooms kind of heat up in different ways just due to the piping there too. So that probably plays in.
These are the problems you have when you live in a 7,500 square foot home. That, most of us we'll just never know those struggles. No, but the thermostat analogy is okay, but it's actually, if you think about why it's a bad analogy, it helps you understand the challenges the Fed faces. Imagine if when you went to change your thermostat, you didn't know exactly what it was outside, and you didn't know exactly when the HVAC was going to come on. And you don't really know exactly how the temperature in one room relates to the room in another. So you can sort of adjust the temperature in your house, but good luck. That's the challenge the Fed faces, and that's why the thermostat analogy, although it's the best I can come up with to date, why it kind of fails.
It's hard, and they only have so many tools to fix it. And one of the ones that we talk about most frequently is the interest rate one. They can also control the monetary supply. Those are really the two things.
Well, those are by controlling the supply of money, you control ultimately they print money.
Right. Taking a look at markets here, we've got the Dow Jones up about 250 plus points. They're rallying about 0.5% plus. We've got the S&P 500 up about 16 points or so, or 0.25%. We're going to have much more on the markets when we come back from this break. We've got Wall Street Watch and much more here on the Financial Exchange. Stick with us.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Winter dates fill up fast. So if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches, in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Life changes quickly as we age. Technology is moving faster and is creating new risks for families they didn't have to worry about before. One of the biggest is elder financial abuse. Hi, this is Mike from the Armstrong Advisory Group. I'm not talking just about scams, but situations where more online accounts, digital payments, and shared access can slowly open the door to problems. Today, financial exploitation doesn't always look obvious. It can show up through unfamiliar transactions, misused powers of attorney, or pressure from people who already have a role in someone's life. That's why the Armstrong Advisory Group put together a new guide called Protecting Yourself or a Loved One from Elder Financial Abuse. To get your free copy, call 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing and Dolan have been helping families like yours for more than 30 years. Call 866-848-5699 or request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in positive territory modestly as Wall Street reacts to a somewhat underwhelming retail sales report from the month of December to cap off the holiday season, where sales climbed 0.4%, down from 0.6% in November. Traders are also sifting through more fourth quarter earnings from the likes of Coca-Cola, CVS Health, and Spotify. Right now, the Dow is up over 0.5% or 262 points higher. S&P 500 up about 0.25% or 17 points higher. NASDAQ also up about 0.25% or 50 points higher. Russell 2000 mostly flat, edging higher. 10-year Treasury yield down 4 basis points at 4.149%, and crude oil up about 0.33% higher, trading at $64.55 a barrel. Beverage giant Coca-Cola reported earnings this morning that missed revenue expectations for the fourth quarter, while its adjusted earnings beat. The company guided for 2026 organic revenue growth of 4 to 5% and comparable earnings growth of 7 to 8%. Coke stock is down over 1.5% to this point. Meanwhile, audio streaming company Spotify seeing its stock rally 18% after the company saw its monthly active users grow to 751 million, up 11% from the same period a year ago and above street forecasts. Spotify's premium subscribers also increased 10% to 290 million. Elsewhere, Taiwan Semiconductor posted its highest monthly revenue ever to $401.3 billion in January, up 37% from a year ago. Shares are up by 1%. Sticking with the chip sector, where ON Semiconductor saw its sales decline in its two biggest businesses and narrowly missed revenue expectations for the previous quarter. That stock is up by about 3%. CVS Health reported fourth quarter earnings and revenue that beat expectations, where the health insurer also held its 2026 profit guidance. However, the stock is up by 2%, and after today's close, we'll see more earnings from the likes of Ford, Robinhood, and Gilead Sciences. I'm Tucker Silva, and that is Wall Street Watch.
President Trump stating that his federal pick for the Federal Reserve Chair, Kevin Warsh, can get the economy to hit 15% growth. Unclear what statistic he was trying to tie that to. Perhaps GDP growth. That's what you'd think when you hear economic growth. But that 15% is a absolutely staggering number. Over the course of the last 5 decades, GDP growth in America has averaged 2.8%. So the idea that it's going to do 5 times that is, particularly as developed as the economy that we are, is a little bit staggering.
Let's talk about that. Is that plausible? Is that a plausible statement? Can the Fed get the economy to grow 15%? Just say year over year. The answer is, what do you think it is?
No.
Yes, absolutely. The Fed can do that. Actually, it would all be
inflation.
It would all be inflation. I assume. And now you say
right.
it's obvious. It's
Right.
almost a trick question.
Yeah.
You say, "Come on, are you kidding me?" And I don't think this is what
I'm going to have to hide her under the desk if we run at 15% on inflation.
It's useful to keep this in mind. You can measure what's GDP, gross domestic product. It's just an accounting construct. It's what we spend, what the government spends, what businesses spend, and then a little adjustment for so-called net exports. But just think of it as the sum total of all the spending in the economy. There are other ways to look at economic output. You can look at the income side of the equation, for example.
We'll talk about that in
they
a
should
sec,
give
yep.
you roughly the same answer. So GDP is, for better or for worse, how we measure how we're doing, how the economy's doing. So could the Fed get the economy to grow at 15%? Yeah, it could get the economy to grow at 100%. The problem is that you're not adjusting for inflation. In the 1970s, for example, the mid-1970s, in 73, GDP grew. It was quite an inflationary year. The CPI year over year was about 6%. But GDP growth, even net of that, was high. But total, they grew at 11.5%. The highest GDP, again nominal, which is a fancy way of saying
without the inflation
not adjusting
impacts.
for
Yep.
Exactly. Yeah, GDP growth in 1978 was 13%. 7% of that was inflation. This is a little bit sloppy the way I'm doing it. But the point is, the Fed can engineer any growth rate, but it's not leading to higher living standards if most of that growth, or half of it, and some of the examples I gave, is coming from increases in the price level. Nobody's any better off. Now, I don't think that level of subtlety was happening in the analysis that lie behind whatever it is you're reading there. But I will tell you, just in the interest of not just saying, well, what a stupid statement, who would say something like that? A more interesting question, maybe, because we try to learn together on this show and maybe impart something to the audience, is, could that happen? Yeah, Fed can do that. You probably wouldn't like that. But yeah, the Fed can engineer really any growth rate.
No, I don't think.
Isn't that interesting?
It is
That's
very
kind of interesting.
That is interesting because no one would speak glowingly about the 1970s for those levels of economic growth. No one would reminisce back as to how great things were. It's quite the contrary.
Well, this is why it's
mentioned.
important to, when someone's telling you something, ask for perspective. You gave some good perspective. You pointed out in the last 50 years, GDP growth has been, you're talking about real GDP growth, adjusted for inflation,
correct.
has been nearly 3%. 3% was about the average of the second half of the 20th century. Since then, it's been about 2%. That's a big slowdown. It doesn't sound like a lot, but in terms of standards of living, we'd be about 40% richer had GDP continued to grow at the rate of the previous century. It's useful to have some of these facts about the economy in your back pocket if you're into this stuff, even if you're only into it casually, so that you know how to call BS on something that's obviously BS.
It's interesting. The 15%, it's good you put it in perspective that it is possible, because
I
wasn't thinking about the inflationary part of it, that it could make it possible.
Yeah, it's like saying, I can make everybody a millionaire. Give me control of the money supply. I'll make you all billionaires, trillionaires. Pick how many zeros you want. You're not going to be any better off than you are today. It's just you're going to have to tag a bunch of zeros onto
the prices of everything. Yeah.
It's a little bit like that.
Kevin Warsh is set to be appointed in May of this year, but also there is the current hearing going on regarding the federal budget building renovation products. So perhaps he gets delayed, his appointment, a little bit, but certainly President Trump has some high expectations for him. So we'll see how that all plays out.
But you understand, in light of what we've been talking about for the past 45 minutes now, nearly, you can't come into that job with a preconception about interest rates, thinking they only need to come down. Because as we've been discussing, it's about striking the right balance, given where unemployment or whatever your measure of slack is in the economy, and where not only inflation is today, but where you think it will be.
Exactly. Great piece here today in the Wall Street Journal. This is by Greg Ip. The big money in today's economy is going to capital, not labor. And he did a fantastic view sort of where we've been. If you look back in 1980, IBM was the belle of the ball, the most valuable company in the United States with over 400,000 employees and the largest market cap at that point in time. Today, if you look at the same sort of pinnacle position of the most valuable company in the United States, NVIDIA has that slot where he makes the point that they are 20 times more valuable and 5 times more profitable, and this is adjusted for inflation compared to where IBM was back in the 1980s. Though it only has 1/10 of the workforce, NVIDIA employs about 40,000 people compared to the 400,000 that IBM employed. And specific to this broader context of these two behemoth companies, of one of yesteryear, though still around today, but not in the same scope and scale, and the one today, NVIDIA, that dominates the markets, is in particular just a analysis on where all that money, where the profitability is going. And it breaks down first from a broader perspective, and we just hit it on a little bit, that GDP is just trying to encompass economic growth, all the value that's being added to the economy. And if you look specifically at a manufacturing business, what it produces in terms of its goods, it has its sales, and then it has its input, the costs that are associated that go into building out those goods. The difference between the two, the sales less the costs, all that excess is usually distributed out through wages and profits and interest. And what has changed so dramatically over the last 40 years, as Greg pointed out in this piece here, is that much more of that profitability was going to the labor force back in 1980, and that percentages has dramatically decreased over the course of the last 40 years, that 58% of those gains from what businesses were selling were going to the labor force. That number sits at about 51% today, and he does that by measuring out gross domestic income, just to sort of get a sense for what is the labor force actually taking away from the profitability of the firms. Rather, a lot more of that money and profitability, rather than it going to the actual workforce in form of wages, is going to household wealth in terms of people who have stock ownership. And I just thought it was an interesting analysis that he breaks out here.
The right statistic, and I don't know why he didn't use it, is share of labor compensation. It's actually, this series is reported by it's in various databases. You can actually get it on Fred. Sometimes we talk about Fred. It's accessible and it's easy to read. You can make your own charts and all that crap if you're into that. Share of labor comp, is now, and it's exactly, the definition is exactly what it sounds like. How much of the economy's income goes to labor? It's at 0.568 today, about 57%. In 1970, it was about 65%. So that's the most widely followed measure of how income's being apportioned.
Right.
And one way to think about this is that productivity's been going up faster than wages. If you think about unit labor costs is compensation divided by output. Am I thinking about that right?
Well, basically this idea that the amount of manufacturer employees in this country relative to where they were 40 years ago, far fewer people who work in manufacturing, but more goods produced, right? That general concept.
Yeah, and the composition of the labor force as a result, how much of it is unionized, bargaining power. When comp is not rising as fast as productivity, so you're not reaping the full benefits of your increased productivity. When that happens, by necessity, the share of income that goes to workers has to fall.
And that's what we've seen since 2019. Profits are up 43% from the S&P 500 companies, but average hourly wages are only up 3% adjusted for inflation over that period of time. And so there's a lot more meat on the bone here that I want to get into, because I think it is a really interesting piece to sort of examine and sort of furthers the concepts that we've talked about regarding the K-shaped economy that we sort of sit in today. So we're going to take a quick break here on the Financial Exchange. When we come back, we'll be talking more about this piece, as well as the S&P 500's next target of 7,000 right after this break here on the Financial Exchange.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches, in crystal-clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
As you get closer to retirement, making sound decisions to protect your assets becomes even more important, especially with increasing cases of elder financial abuse. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A Bloomberg report from last September notes that older Americans are losing an estimated $28.3 billion to exploitation. Scam calls and fraud emails are issues to be aware of, but there are other warning signs that may not be easy to spot. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse. In it, we discuss a variety of concerns to watch out for, as well as steps that you can take to stay ahead of potential problems. Call us right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001, or you can request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets is the most important part of a sound estate plan. Cushing & Dolan's new guide called Back to the Basics, a complete guide to an estate and asset protection plan, can help. Learn how to avoid probate and address your estate tax concerns. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. The weather is perfect all year round, so head to visit usvi.com and book your trip to St. Croix, St. Thomas, or St. John. Enjoy one or all three on the vacation of a lifetime. The USVI is America's Caribbean paradise. Plan your winter escape now at visit usvi.com. That's visit usvi.com.
Spinning back here to this story that was part of the Wall Street Journal this morning, where it goes over just sort of the shift that we've seen in the economy specific to some companies in the United States over the course of the last 40 years, where there has been a big shift from capital, or rather to capital from labor, where basically labor was receiving 58% of the total proceeds of economic output as measured by gross domestic income, which is kind of similar to the concept of GDP in 1980. That percentage sits at the third quarter of last year at 51%. So we've dropped from 58% of sort of the benefits being reaped by a company going to the labor, the staff on hand through the course of wages and bonuses and other types of coverage, to now down to 51%. And so where has that money gone? If it's not going to labor, a lot more of it has gone to profits. And ultimately, if you follow out that chain, more profits of a company, typically you see increased earnings. And as a result, you see the stock price going up of companies, just very broadly speaking. And so it hits on this idea that I have mulled over a lot, where it just seems like, Mark, to me, and this helps put some numbers behind it, but it's not exactly precise, that the stock market has a lot more bearing on sort of consumer spending and sort of the amount of optimism that folks have for the economy, particularly on the higher end of things, than it did 5 years ago, 10 years ago. And maybe that's just emblematic of what's been a really great run for markets over the last 3 or 4 years or so. There is a stat that Greg points to here in this Wall Street Journal piece that if you looked back at 2019, household stock wealth was 200% of their annual disposable income. That figure now sits at 300% today. And obviously that is reflective of a really good 5 or 6 year run for the markets. But the amount of money people have on the higher income side of things that is invested in stocks is 3 times what they would make from an annual disposable income. And so this is a point that I've mulled over and I do feel like has more impact than it did previously, how the markets fare and how that impacts consumer behavior.
And it's a double-edged sword. This is a big area, so I'm not going to pretend to have any deep insights. With respect to your last comment, though, the effect you're describing has been pretty well documented. Yep. It's called the wealth effect, and it's exactly what it sounds like. It's the percentage of stock gains. If stocks go up 1%, how much does spending go up? Somewhere between 3, 5, maybe 7 cents. So the wealth effect is somewhere in the low to mid single digits. That changes, but most researchers agree that there is such a thing. Is it bigger, and is it more stable now than it used to be? And if so, what happens when stocks crash when they inevitably do? There was a time when a crash in equities, I don't know, like 1929, that didn't bode well for investment, but it didn't freak people. It did freak people out. I shouldn't say that, but it didn't immediately cause a drop in people's net worth. It did immediately cause a drop in some types of spending, though, interestingly. Very few people owned equities in those days. We're now talking nearly 100 years ago, which is why I bring it up. What would the effect be like today? I don't know.
Yeah, Doug Petta, a strategist at BCA Research, he estimated that a 10% stock return, including dividends taxed at the highest marginal rate, would boost spending capacity as much as an 18% rise in income. Again, that's just one researcher's take on it, but sort of furthering this idea that I've mulled over a lot.
Yeah, the problem with approaches like that, I do that occasionally internally when I say to the group, here's the wealth effect and here's how you estimate it, is that you can't assume that those relationships will hold. They're not very good at They don't hold up really well as forecasters.
Taking a look around at markets, markets largely in positive territory here, shaking off a weak retail sales report that we got earlier this morning, with the Dow Jones up about 230 points, or close to a half percent. The S&P 500 is up about 14 points, or 0.18%, and the NASDAQ is relatively flat, only up about 26 points at the moment. The U.S. 10-year Treasury is off about 5 basis points, sitting at about 4.15% on that retail sales miss, and we've got oil sitting at around $64 a barrel, not moving too much. The most interesting area of the market in 2026 in terms of volatility has definitely been gold and silver, but they're not being nearly as volatile as they've been in the past, with gold only off about 1% today, sitting at a little over $5,000 an ounce, and silver's off about 2%. That's all the time that we have for the first hour here on the Financial Exchange. We're going to take a quick break, but we've got much more to cover here on the second hour. Stick with us here on the Financial Exchange.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Have you saved enough for retirement? This is Mike Armstrong from the Armstrong Advisory Group. The advisors at our firm have 150 years of combined experience in the financial services sector, and they all work together to help you develop a unique financial plan that offers investment management, financial planning, tax strategies, and retirement planning. It's our goal to help you position your assets and give you peace of mind. Having a solid retirement strategy and investment plan becomes more important as you age, so visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Just click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us develop a plan to help you secure your financial future. Again, that's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal-clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a new guide available this month titled Protecting Yourself or a Loved One from Elder Financial Abuse. Mike, when we talk about some of the new schemes that we're seeing that are unfortunately taking advantage of seniors, what are some of the more common ones that have popped up in recent years and months?
Yeah, I think whenever you see new emerging ones popping up, it's because something is getting a lot of attention in the first place. So, for instance, we have seen the emergence of more and more crypto-themed Ponzi schemes or frauds that are trying to convince somebody, for instance, that, hey, invest your money here and you can see massive returns over a short period of time. The person viewing it might have already heard about how certain crypto investments had returned a lot of money over a different period of time and assumed that it is legitimate when in a lot of cases it might not be. The other ones that you see, though, I mean, they run the gamut, but they often try and take advantage of someone's trust in an institution. So that could be trust in your bank. It could be trust in your local government. It could be trust in a financial institution like a custodian, where you assume, hey, I've been afforded these protections when working with a major investment custodian or bank, so I'm sure I will be if I sign up for an account here or there. And while this is most common in seniors, it can take place in other places too.
Folks, the guide is titled Protecting Yourself or a Loved One from Elder Financial Abuse. The way to request it is by calling 800-393-4001. You can also request it at armstrongadvisory.com. That number again is 800-393-4001.
4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate planning is about more than just deciding who inherits what. It also shapes how your assets are treated over time. And that's a key point from the estate planning attorneys at Cushing & Dolan. Without a clear plan, an estate can face significant tax exposure, as well as long-term care costs that can put pressure on your savings. Trusts often play an important role in your overall plan because they can help address tax concerns and long-term care planning, while still allowing you to retain control during your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what to consider as you prepare for the years ahead. To get your free copy, call 866-848-5699. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome back to the Financial Exchange. Taking a look around at markets, the Dow Jones is up nearly 300 points, close to 0.5%. The S&P 500 slightly in positive territory as investors are largely shaking off a retail sales report that was rather weak that came out this morning at 8:30, where we saw in the month of December that there was no increase in retail sales spending, which tries to capture consumer spending for the country. It was anticipated that we would see an increase of about 0.4%, but the December number came in flat entirely. And if we look back over the course of the last year, we saw that from December's numbers, about 2.4% increase year over year on retail sales spending compared to inflation that was running at 2.7%. So almost a decline if you adjust for inflation. Again, just one data point. It's ultimately more important to focus on the trend of retail sales reports. If they continue to march down progressively and are weak month by month, then it's an area of concern, but this could just be an anomaly because the month of November's report was quite strong. As a result of that, you do see that the U.S. 10-year Treasury is down a little bit on that miss from retail sales, sitting at about 4.14% off where it started previously, close to about 4.2%. Really big week here on the economic front. We are going to get a jobs report that will come out tomorrow that will break down where we stand on the employment front, recapping the month of January. And then on Friday, we will get a CPI inflation report. So a lot of material to digest on the economic front this week. On the market front, we have had a looming goal out there that has been mentioned by many pundits, even though I don't really care about it that much, is trying to hit 7,000 on the S&P 500. It has been something that has been eluding markets over the course of the last several months or so, just briefly eclipsing that 7,000 mark just once. But a piece here from Bloomberg regarding the next big target for the S&P 500. And to be fair, the columnist Jonathan Levin does make the point that ultimately 7,000 or 5,000 or 6,000, none of those 1,000 marks are that significant in terms of what it means for markets. But he did have a point in here that I want to highlight just briefly is earnings growth for the S&P 500 has been quite strong. We saw 13% or 12% earnings per share growth this earnings season. It is anticipated that earnings are going to grow about 13% this year, and it's going to be a little bit more widespread. Obviously, the technology sector drives a lot of the earnings growth, but it is anticipated that 10 out of 11 sectors will see earnings growth this year. So that piece on the market side, I could care less, and I'm sure you're probably in the same camp as to whether the S&P 500 hits 7,000.
It's part of what matters. A valuation ratio, any ratio has two components, a quotient. It's a ratio. What's on top is the price. That's your 7,000 in this case. Mm-hmm. What's in the denominator on the bottom is some measure of earnings or sales or whatever whatever it is you're trying to value. People could mean a lot of things when they say stocks are richly valued or cheaply valued. So you have to ask, what do you mean? What measure are you using? So you pointed out earnings growth. The E in P to E might average low double digits over the last few years. The problem, if you think this is a problem, not everybody agrees, is that the P in P to E has been growing faster. The top in the ratio, the numerator, has been growing faster than the denominator. That means rising valuation ratios. Historically, valuation ratios have been a pretty good forecaster of long-run returns. The higher they get, the more you pay for something, the lower your expected return. It's obvious in the case of a bond where you pay more for something, your coupon is lower because the coupon is in the numerator and the price is in the denominator. You can think about equities the same way. So equity valuations is measured by PE, no matter how you define the E, and there are lots of different ways to do that too. They're pretty steep, Paul, as you know.
Yes.
They're at levels where historically big declines have followed because high PEs don't adjust by the E getting bigger to bring it down historically. They adjust by the P coming down. Right. And that's what's got some fundamentally oriented people worried. On the other side of that, you've got AI exuberance and you've got very supportive fiscal and arguably monetary policy.
Yeah,
somewhat supportive fiscal policy. Excuse me.
The ratios, like you mentioned, the price to earnings one, we've chronicled that a ton on the show. The idea that we are in a significantly high percentile in terms of price to earnings. The problem with those is that they can be lousy short-term predictors of market action. But it is certainly worth noting because these valuations do tend to revert to their mean. The question is just when they do that.
Well, I wouldn't say,
well, not perfectly to their mean, but they revert
the question
back.
is to what mean. The mean of, I'll just say PE, even though I mean P relative to some longer-term measure of E, smoothed, like an average inflation-adjusted measure. That seems to have gone up. PEs seem to have gone up over time. There was a break in the way they behaved, arguably in the early 90s. So most people would say, well, we're going to go back to the average PE, the 60s, 70s, and 80s, which would be less than half of today's level, which would be a huge drop, a permanent drop, by the way, in stocks relative to earnings, unless you think PEs are going to climb again. But most people are uncomfortable with where they are today.
We are going to get that labor market report, as I mentioned, tomorrow from the Bureau of Labor Statistics for the month of January. What also will come with that report is a revision on the payroll data that we've seen over the last 12 months from March of 2025 through March of 2024, they are expected to be a pretty significant downward revision. I've read Bloomberg economists estimating it at about 650,000 of a downward revision, but I've also seen other numbers elsewhere.
For last year, for a total for what period, Paul? Sorry to interrupt.
Through March of 25, and I believe it's a 12-month.
Yeah, I always forget how they do this. Sorry, it's not a labor economist, but so that's going to be the 12 months through last March.
That's what the Bloomberg economist
had
estimated. The adjustment I've seen elsewhere, 900,000. If you look back at that period, there are some significant months of gains through December of 24, where there was 323,000 jobs added. So again, we'll be really focused on what the data that we see that comes out in tomorrow's report. Of course, we'll get an update on the jobs added for the month of January, where it's anticipated 70,000 jobs are added to the economy. That would be the highest over the last 4 months, because we saw December come in around 50,000. So certainly a lot of focus on that labor report tomorrow, and the unemployment rate too will probably be the biggest statistic that we'll be focused on.
Yeah, that of course won't be affected by the revisions.
Right.
So suppose unemployment doesn't move, stays at 4.4%, but a million jobs get wiped out.
Mm-hmm.
That's in the past.
Backward looking, yep.
So what should the Fed do anything? I'm being a little bit rhetorical here. When you keep their goals of low and stable inflation and maximum employment or minimum unemployment equivalently, those are the two prongs of their so-called mandate, which are in tension. Should it even matter? If a million jobs get wiped out but unemployment doesn't change?
No, I don't think so, because ultimately it's backward looking, and I don't think it would be a tremendous surprise to many economists out there that it seems like these downward revisions are going to be part of the process. It will be staggering to see the number, but ultimately it's something that you just have to, and again, it's an impossible job. I wouldn't want it, but you just have to take what you're getting, the most real-time data that you're getting, into consideration.
There's nowhere that fits in the models that the economists at the Fed use, as I understand them, that revision. Now, I could be misspeaking. I understand them in abstract terms, like I've seen them in a book, but I've never worked with them because I've never been a Fed economist. So it may, but it may also mean nothing. We've got 4.4% unemployment. We've got inflation that remains above the Fed's goal and could easily tick up with all the monetary stimulus, the fiscal stimulus that's being pumped into the economy, coupled with elevated inflation expectations, which are an important part of the inflation process. It's just not obvious to me that it should mean anything, even if it's dramatic, as you said, Paul.
We're going to take a quick break here on the Financial Exchange. And when we come back, we're going to be talking with Corey Adams from Robert Half, specifically about the labor market. There's been a lot of significant trends in the labor market. AI certainly is on a lot of employees' minds. So we're going to be talking to Corey Adams from Robert Half about where the labor market stands and the impact of artificial intelligence on some of these desired skills for employees out there. That's right after this break here on the Financial Exchange. Stick with us.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
As you get closer to retirement, making sound decisions to protect your assets becomes even more important, especially with increasing cases of elder financial abuse. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A Bloomberg report from last September notes that older Americans are losing an estimated $28.3 billion to exploitation. Scam calls and fraud emails are issues to be aware of, but there are other warning signs that may not be easy to spot. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse. In it, we discuss a variety of concerns to watch out for, as well as steps that you can take to stay ahead of potential problems. Call us right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001, or you can request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate planning is about more than just deciding who inherits what. It also shapes how your assets are treated over time. And that's a key point from the estate planning attorneys at Cushing & Dolan. Without a clear plan, an estate can face significant tax exposure, as well as long-term care costs that can put pressure on your savings. Trusts often play an important role in your overall plan because they can help address tax concerns and long-term care planning, while still allowing you to retain control during your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what to consider as you prepare for the years ahead. To get your free copy, call 866-848-5699. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Winter dates fill up fast. So if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John. 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
As promised, we are joined by Corey Adams from Robert Half, who conducts surveys on the labor market, and in particular what we'll be focusing on is the demand for skilled talent here today. Corey, thanks so much for joining us.
Good morning, Paul. Great to be with you.
Corey, in the headlines recently, there has been a tremendous amount of focus and scrutiny on AI and the new programs coming out that could potentially impact white-collar workers in terms of Claude Code and all these other software that could be potentially drummed up by all these AI, artificial intelligence models out there. Give me a look at what employers are saying just in terms of the labor market and what they're looking at for 2026. What skills are in demand? What are areas that perhaps there's waning demand for? Just give us a sense for what you're seeing on the employer front.
Sure. So we'll kick this off. The demand for skilled talent, perfect timing for 2026. There's a lot of information, so we'll probably cover a lot this morning. So let's just start here. For the employers out there, we're seeing that hiring optimism is rebounding in the first half of 2026. The research shows that 60% of employers plan to add permanent staff, and 55% expect to see an increase in contract hiring to support their immediate needs. Staying with the employers, they're showing business confidence. 83% of hiring managers said that they are confident in their business outlook for 2026, of which 43% expect strong company growth. Important note, both those numbers are up significantly from the last time we asked this question around the same time period last year. To your opening comments, we're also finding that there are challenges in the hiring process because of AI. 65% of managers said that hiring has become harder due to the rise of AI-generated applications, and 58% reported greater difficulty in identifying truly qualified candidates compared to 1 year ago. And then finally, to close out sort of our top key findings, businesses are entering 2026 with widening skills gaps and more complex hiring conditions. 62% of hiring managers say the skills gap has grown in just the last year, and I thought this was really important. Only 6% of managers feel like they are fully resourced with both talent and headcount in order to deliver on their current initiatives and projects for 2026.
I'm a little surprised to hear that there is some more hiring optimism, because everything you read tends to point to major employers sort of focusing on kind of keeping headcount level, and can we invest more in artificial intelligence or technology in general to try and not necessarily eliminate roles, but maybe optimize them. So why are employers feeling more optimistic? Because it kind of runs counter to a lot of the discourse that you read on the labor market.
Sure. Well, there's a few things. So first, as I just said, business confidence is improving because the economic conditions are stabilizing. And so that's sort of your baseline. When that happens, it's always a good start. And the reality is, what we're seeing and our research shows us is that many organizations that paused hiring in 2025 are actually restarting some of those strategic projects. In fact, many started at the end of last year. And so all of that momentum is fueling demand for talent, especially in the hard to hire skill areas. And listen, let's just talk about AI for a minute, because you brought it up in the impacts. I mean, generative AI has literally transformed how candidates are applying for jobs. And by the way, it's not always for the better. So according to our research, 65%, and I said this, I want to repeat this, but 65% of managers say that finding skilled talent has in fact become harder, and 58% said that the AI-generated applications make it more difficult to identify truly qualified candidates. So these AI tools allow job seekers to produce overly polished and near identical resumes, cover letters, and work samples at scale. And so while that is certainly helpful in many ways for the job seeker, it also means that many hiring teams are spending significantly more time verifying work, validating experience, and ensuring a candidate's skills actually translates into real-world readiness. So the bottom line is that the world of AI, as it relates to the job seeking and the job employment process, is ultimately adding friction to the hiring process and increasing the risk of misalignment between the actual applicant and the actual job requirements.
Certainly is a fascinating subject. Just quick for you here, just what are some of the ways that employees could stand out? Because you mentioned that everybody's kind of just replicating the same resume look. What are some ways that they could stand out compared to their peers that they're up against for a new job?
Sure. So for the job seekers, first off, I would just say this. Good news is there's still demand and great opportunity for professionals with specialized and in-demand skills, both technical and interpersonal. And I tend to emphasize that second one because it's one thing that you can truly control. So job seekers who combine soft skills like communication and adaptability, which, by the way, AI cannot replicate, and you combine that with technical know-how with business and applications and solutions, from problem-solving, adaptability, and cross-team communication, I promise you there's a 100% chance that you will, in fact, stand out. And we're also going to suggest that you prioritize job-specific upskilling and certifications, as these can be key to differentiating yourself in this market, but especially for the entry-level workers who don't have as much of an opportunity or experience to showcase their abilities. And the last thing I would say around this, and not so much a tip, but more of a heads up, and sort of reference this with the world of AI, but as a job seeker and a candidate, you should 100% expect a more rigorous assessment and or interview process, as employers right now are looking for ways to truly verify real capabilities in this AI-driven hiring environment that we're all sitting in right now.
Corey Adams from Robert Half. Thanks so much for the time, Corey.
Thanks, Paul. Appreciate the time.
All right, time for trivia here on the Financial Exchange. And with the Winter Olympics going on, you'll be inundated with ads from the likes of Visa, Airbnb, Coca-Cola, etc. These companies are some of the official sponsors of the Winter Olympics. The first Olympic sponsor came back in 1928. So our trivia question today, what was the first company to be an official sponsor of the Olympics? Once again, what was the first company to be an official sponsor of the Olympics? Be the fourth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Have you watched any of the Olympics yet?
No,
I haven't.
I was just watching a commercial for them.
I've been meaning to check it out. Tucker, have you
Yeah, the curling's actually been pretty intense, believe it or not.
I'm taking some time off, so hopefully on vacation I'll be able to catch up and watch a little bit.
Yeah, the kiddos
of the
like
Olympics. Yeah, that'll be fun to show them some of that stuff. It's a fun time. We're gonna take a break here on the Financial Exchange. When we come back, we're gonna have the answer to that trivia question about the Olympics and Wall Street Watch right after this break.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Winter dates fill up fast. So if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Life changes quickly as we age. Technology is moving faster and is creating new risks for families they didn't have to worry about before. One of the biggest is elder financial abuse. Hi, this is Mike from the Armstrong Advisory Group. I'm not talking just about scams, but situations where more online accounts, digital payments, and shared access can slowly open the door to problems. Today, financial exploitation doesn't always look obvious. It can show up through unfamiliar transactions, misused powers of attorney, or pressure from people who already have a role in someone's life. That's why the Armstrong Advisory Group put together a new guide called Protecting Yourself or a Loved One from Elder Financial Abuse. To get your free copy, call 800-393-4001. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Todd Lutzke from the law firm of Cushing & Dolan with your financial exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, the markets are mixed as Wall Street reacts to a somewhat underwhelming retail sales report for the month of December to cap off the holiday season, where sales climbed 0.4%, down from 0.6% in November. Traders also sifting through more earnings from the likes of Coca-Cola, CVS Health, and Spotify. Right now, the Dow's up 0.4% or 208 points higher. S&P 500 is flat. NASDAQ down 21 points now. Russell 2000 is up 0.33%. 10-year Treasury yield down 5 basis points at 4.139%, and crude oil down about 0.5%, trading right at $64 a barrel. Beverage giant Coca-Cola reported earnings and missed revenue expectations for the previous quarter, while its adjusted earnings beat. The company guided for 2026 organic revenue growth of 4 to 5% and comparable earnings growth of 7 to 8%. Coke stock is down about 2%. Meanwhile, audio streaming company Spotify is seeing its stock jump 15% after the company saw its monthly active users grow to 751 million, up 11% from the same period a year ago. Elsewhere, Taiwan Semiconductor posted its highest monthly revenue ever to $401.3 billion in January, up 37% from a year ago. Shares are up over 1%. Sticking with the chip sector, where ON Semiconductor saw its sales decline in its two biggest businesses and narrowly missed revenue expectations for the previous quarter. Shares are up over 4%. CVS Health reported fourth quarter earnings and revenue that beat expectations, where the health insurer also held its 2026 profit guidance. That stock is up modestly. And after today's closing bell, we'll see earnings from Ford, Robinhood, and Gilead Sciences. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: what was the first company to be an official sponsor of the Olympics? Well, that would be Coca-Cola. Stefan from Wareham, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
What fast food's downturn says about the U.S. economy here, a piece from the Financial Times. We've covered this a bit on the program, where the costs at fast food restaurants has increased significantly and just really not commensurate with wage increases over the course of the last several years. And it's particularly harming lower income consumers. And as a result, you've seen companies like McDonald's come out saying that they are seeing double-digit declines percentage-wise in their lower income consumers visiting their drive-thrus. And so as a result, what you've seen is a lot more value being accreted to kind of those fast casual dining restaurants. Chili's is the most emblematic example of that. Their stock has done tremendously well as they have offered, I believe it's 2 entrees for $15 or some sort of, I think that's the value meal that they've been offering. And so as a result, you've had McDonald's that has had to come back with more emphasis on their $5 value meal. And it's just been a very difficult go around for fast food. You've got Wendy's closing hundreds of locations across the country with the decline in activity. While on the other hand, fine dining has done quite well. It's been the top performing segment in the restaurant segment. So not easy for those fast food operators out there, Mark.
And maybe this relates to some of the bigger themes that you were talking about earlier in the show. You mentioned some summary of some work that Greg Ip did, and I don't know if he did it himself or if he just summarized other people's work or what, in the Wall Street Journal about labor share of income falling. We know inequality's been rising. The impetus motivating those trends seems to be just technology and its effect on wages of people without a college degree. These trends have been playing out. These themes have been operating for a long time, and thus these trends are long term. Do you think, because you think a lot about these things, is this related to what we're seeing in terms of fast food, this big segment of fast food struggling? Is it as simple as that their consumers are struggling? I'm sorry.
Yeah, I think so. Obviously I don't have it with precise certainty, but if you think about and look at just the costs of eating outside the home versus eating just regular grocery store food prices, you've seen a 4.1% increase on menu prices over the last year compared to 2.4% for grocery item costs. So if you do have those lower income consumers that are feeling more pressure from a wage perspective, they're going to gravitate more of their spend to the grocery store than eating out. And typically those fast food restaurants like the McDonald's, like Wendy's, would cater to those lower income consumers because of the cheap affordability of food outside the house with ease and convenience. And with some of these prices, they're not really hitting that. And to me, broadly speaking, the gap between the price that you pay at McDonald's for my kid's Happy Meal versus, that Chili's or that mid-fat tier, fast casual restaurants, it's narrowed to a point where you start to question, if I'm going to spend this much, I may as well kind of go up a level if I'm going to actually go out and get something to eat. And it seems like that's sort of playing out over the broader area here.
Winter dates fill up fast, so if you're thinking about escaping the cold, well, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here you can fall naturally in rhythm with the heartbeat of the islands, spend your days on powder-soft beaches in crystal-clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required and no money to exchange. Start planning your trip today because winter getaways don't last forever. Head to visitusvi.com for details and more information and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Mark, for the last 10, 15 years, the U.S. stock market has absolutely pummeled international equity markets. And you and I have talked off-air that the traditional portfolio construction has often been, if you look at a target date fund, let's say, for example, in a 401k plan, and we'll just look at the target date fund for a younger employee because that is primarily stock for the purposes of this conversation, that you'd have a bulk of your money in U.S. equities within this, cookie cutter target date fund, but there also would be a slug anywhere from 20 to 40%, depending on who you're looking at, in international equities. And like I mentioned, the trend for the last decade plus has been U.S. markets have just absolutely bludgeoned international markets in terms of their outperformance. But what we've seen over the course of the last year or so, and the momentum has continued into 2026, is that international markets are performing much stronger than its U.S. counterparts. And some of that is these broad themes and regarding the dollar weakening, some optimism around the European Union spending a little bit more money on defense. What are your thoughts on sort of the international takeoff? And if I was to tell just a layman person who's not a well-seasoned investor, are those the broader themes leading to the inflows? It seems like it's not as if there's substantial earnings growth to justify this flock over relative to U.S. peers.
Well, first of all, your point about portfolio construction is the key one. A diversified investor, an investor who seeks high returns without unnecessary risk, should, all else equal, allocate some of his or her portfolio to their home country and some abroad. And the reason for that is that expected return, the historical returns, despite the big gap that's opened up, and it's a big thing to say despite with respect to, but I'm going to say it anyway. Notwithstanding, just a synonym. It feels less stupid to say it that way. The big gap in the past 10 to 15 years, historically, foreign markets have offered developed markets. Now I'm comparing apples to apples. Have offered returns comparable to U.S. markets. So a prudent investor seeking to mitigate risk, not take unnecessary risk, would have allocated some of their portfolio abroad. That's just a basic principle of diversification. And a good example of that is, as you point out, so-called target date funds, which are managed according to very conventional modern portfolio management practices. Is now a good time? Well, historically, when one or the other, U.S., in our case, because from our perspective, that's the home market, when U.S. stocks have had an exceptional run relative to foreign stocks have, I want to say outperformed, but I'm oversimplifying a little bit here, because the valuation gap, that concept we talked about earlier, gets pretty wide, and foreign stocks become relatively attractive, unless you think U.S. growth and therefore company earnings rates will continue to outpace foreign.
Yeah, that's what's
I'm
at
sorry,
stake.
that was a lot of gobbledygook. I just meant, diversify. So that means owning a little bit of whatever's available out there.
The last 10 years, if you look back, broad U.S. index, I'm using the S&P 500 here, has done about close to 15%, where the world indices, and there's a bunch you can use, but just broadly speaking, there's been about a 2.5% gap between the two over the last 10 years. But the last 5 years number has narrowed down a bit, just because you've got these world indices, international and emerging markets performing a little bit more strongly. So it'll be an interesting trend to continue to follow. Like you mentioned, that the most common sort of portfolio construction has some international in there, but they certainly are seeing a lot more stronger performance.
And in the 70s and 80s, global, international, and again, I'm being a little fast and loose here, but beat the snot out of U.S. And after that time, people realized, starting with institutions like pensions, realized, well, you got to have some international. And then, of course, U.S. went on a tear during the late 90s,
pendulum
similar to today's
forth.
tear.
Yep.
And then international, specifically emerging markets, dominated in the first several years of the 2000s. Everybody loaded up on it, and it subsequently underperformed. By the way, that's not a coincidence. Loading up on it means pushing the price up.
Right.
Pushing the price up means pushing down future returns. The more you pay for something today, the lower your expected return, all else equal.
We're going to take a quick break here on the Financial Exchange. When we come back, a little bit of stack roulette right after
Find
this.
daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Protecting your assets is the most important part of a sound estate plan. Cushing & Dolan's new guide called Back to the Basics, a complete guide to an estate and asset protection plan, can help. Learn how to avoid probate and address your estate tax concerns. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As you get closer to retirement, making sound decisions to protect your assets becomes even more important, especially with increasing cases of elder financial abuse. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A Bloomberg report from last September notes that older Americans are losing an estimated $28.3 billion to exploitation. Scam calls and fraud emails are issues to be aware of, but there are other warning signs that may not be easy to spot. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse. In it, we discuss a variety of concerns to watch out for, as well as steps that you can take to stay ahead of potential problems. Call us right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001, or you can request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Winter dates fill up fast. So if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John. 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
Stronger, more powerful.
We have each other.
When we come together and go red,
The more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV 5K raised over $150,000 last year, but we still need your help. You can support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k. Ow, .boston. I just got like static from the microphone. That hurt. Ow.
Guys on fire over there.
Literally, that was just a spark off my microphone. That was not fun.
A hot mic.
Literally.
Literally. Time for a little bit of stack roulette. I will kick it off with a little bit more Olympics chatter. Apparently, Mark, these medals that these athletes have worked their whole lives to try and obtain are falling apart very quickly after they are being gifted to them. They've done an investigation where these Italian officials are promising to scrutinize what has become an epidemic at the Olympic Games here, where many recipients of different medals, and it could be gold, bronze, or silver, the medals are falling apart. Basically, the medal is detaching from the ribbon around their neck when they celebrate. It doesn't take much to jar them loose, and I can't imagine the amount of hours and prep and time that has gone into them reaching the pinnacle of their career and getting a medal, and then having that said medal fall apart. Apparently, they were put together, made by recycled materials recovered from its own production waste. This company, it's called IPSC. I'm going to throw them under the bus here. IPZS. It was the State Mint and Polygraph Institute. That's a government-owned company that produces the Italian coins. It's just not fitting the bill here. I can't imagine how much of a bummer that would be to have my silver medal fall apart when I throw it on my neck. Just not a good look here. I've heard this a couple times about Olympic medals. This is not new. The thing I had heard previously, this is more a ribbon and medal issue, them becoming detached. But the issue that I've heard for prior Olympics is that the coloring on the gold, very quickly fades and looks, quite lousy, and the shine sort of deteriorates quite fast from it. Other issues that you guys have heard of over the years that I'm neglecting to mention?
Mine have held up pretty well, but they're not for like napping or. They're not solid gold. Maybe that's obvious, but I had to look it up.
They should be.
They're mainly right.
Yeah, but I can imagine the expense. Well, we know
smaller, but gold. Just make them small and put them encase them in something.
Yeah,
something solid gold would be. Half of them probably wouldn't make it home, but they're not solid gold. They're mostly sterling silver, like 93%, with a minimum, it says here, of 6 grams, which is just gold plating, which gives them the veneer.
And that veneer falls apart really quickly.
But are the actual metals cracking into?
No,
do they join them, and are they coming apart at the joint, or?
It's just the ribbon versus the metal. The metal itself.
So it's falling off the ribbon.
Yeah,
well, because they're heavy. Dented. I mean, they're a little. They weigh like
the gold one weighs a pound,
several hundred. Oh, okay.
Yeah, the gold medal weighs a pound.
Forgive me, they're not idiots. These are most. These are we're very proud of our American competitors. But you don't dance around with it. They're complaining because they're dancing and then it's breaking from the ribbon.
Well, you gotta be a little excited, Mark.
Yeah, they've only spent their whole lives training for this.
You take it off first, then you jump around like a moron.
Right.
It should be obvious that it's going to become detached.
Strongly disagree.
Okay.
Yeah. You've been dreaming of this moment since you were 6 or 8 years old. Who knows how early they start training? 6 years old, you get that medal.
You're right. Sorry, I take some of that back.
You want to wear it around your neck, and you don't want to say, "Hey, I'm gonna here, coach, you hold it, and I'll go dance over here." You want that around your neck.
Yeah.
Okay.
What's your athletic career? Were you an athlete back in the day?
We're not going to talk about how much time I.
I was watching last night, and you guys know luge, right?
Yes.
It's just like the bobsled, but just a single person thing. How do you do that? Like, how do you be like, hey, I'm going to get into this. Let me go down the street to the luge track.
Sledding enthusiasts.
I don't know where you find these luge tracks. They're huge.
That's a great question.
And they go like 75 miles an hour. How do you get into this stuff?
I would be very curious what the U.S. scene. It's got to be out west, like Colorado, that area that attracts the talent there. Because I don't know of anything
Utah
in New England.
Had one.
I don't know anything in New England that.
No.
I've never heard of anybody get into luge around this area.
I think there's a curling situation in Boston.
Curling clubs I've heard about before, but I have not heard anyone who is a big luger in the family. That doesn't tend to get a lot of play. Skiing, we definitely have got a lot of around this area, but I'm the last person to be able to give any sort of insight on winter Olympic sports. I barely have a winter jacket. That's all the time that we have for this episode here of the Financial Exchange. A lot more to cover for the rest of the week. Jobs report tomorrow. We'll have it for you at 10 a.m. Thanks so much for joining us, guys.